Uh, okay, guys. So today I'm going through my supply and demand trading strategy that I'm doing currently on gold. And yeah, so I want to kind of share with you guys what's been working for me. So yeah, let's get right into it. So right now on gold, long term, long trend, but I did want to show something to you guys that I wanted to know. So I'm not going to make this complicated. It's for beginners, experience, whatever. It's not going to be any terms you don't understand, hopefully. But the red lines that you're looking at on my chart, let's just start there. So those red lines that you're looking at, there's no indicators on my screen or anything. This is just representing when price changes direction. So the direction of price was upward, right? Because if you look at gold, it's obviously going up, right? All this. But something weird happened. On the 4 hour, if you look previously, we never had gold. The previous two times gold was bearish to retrace itself, to recorrect itself, was here and it was here, right? But the problem is the fact that it only retraced so little in the past, but now it made this big retracement. Now it could be retracing to a lower level here, but the fact that it did that was interesting to me. So what I did was I drew that red line as a break of structure, which is basically a disruption of a trend. So if a trend's direction is going up and it disrupts by the price breaking that, then it's a break of structure. So I called that my BOS. And let's just hold on a second. Sorry, I just had this. Yeah, let's just go over this. So I had the second red line here, and what I'm about to do is I'm going to sell gold if price continues to go downward. So price right now went a little bit downward, right? But I noticed that there's also some demand down here it could be tapping into, and that's also a reason why we see these. If you look at the bottom of my screen, if you why we see these wicks, right? Because um, these wicks can be tapping off of this demand here, and gold can actually be going up. And to make the screen more clear, I'm gonna get rid of these zones here. So I'll leave that zone because this part right here, all this stuff that you're looking at right here, this is important because this is the current moment and this is the what I'm looking for. So within that circle that I just drew, if price breaks this high right here, I'm gonna buy gold. Okay. If price goes below and breaks that red line, I'm gonna sell gold. The cool thing about having a strategy and having a confirmation set of checklists and things you trade is the beauty of entering off of your confirmation. So if I don't have all the things I want to see in the market, I'm not going to be trading whatsoever. So yeah, guys. So I'm not going to be trading whatsoever if I don't have what I want to see in the market. So this is the beauty of having a trading strategy. So when you have a trading strategy, there's two elements to it that you guys need to write down. The first element is the fact that is sorry. The first element is your confirmation checklist. The second element is your risk to reward. I know a lot of people talk about this, but what makes you really blow your account and hold you back from scaling is over leveraging. Now, specifically over leveraging when you lose a trade and you want to revenge trade, or when you're greedy, or when you just want to trade like six trades, right? The problem with that is if you lose someone, they blow your account and you have no progress, and you have to work more at your job to refund your account, right? So we don't want to do that. So we want to develop an actual strategy written out on a piece of paper, and the next page should be risk to reward. That will keep you from blowing your account. From That'll keep you disciplined, that'll keep you less emotional, and it'll help you become a profitable trader like me. So the first thing you guys need to realize is the fact that for gold, I'm going to tell you guys the time frames I use for gold. So for 4 hour, I use for my long term structure, and when I'm trading gold, I use the 3 minute time frame for my short term trade. And those blue circles you're looking at within that big ass neon circle is my smaller time frame market trade, market structure. So I'm going to go here and I'm going to delete that circle, and I'm going to pay attention to those circles that I have here. So if you notice, you see zones everywhere and shit. Don't pay attention to those zones. I want you guys to only pay attention to those blue circles, which look like they're going up, right? There's higher highs. Why is there higher highs? Well, our current high is this for gold, which is at 3,352. That's where the price of gold is, and that's the high date. Then the price of gold lowered from 3,353.52 to 3,322. This is why paying attention to the actual coordinates of price is important because it shows you the difference and it shows you your price range that you want to be buying and selling. So if you're buying as a trader, you know, you guys don't know this, but if you're buying as a trader, you always want to buy low within your current range. Your current range is determined by finding your current trend, which is your market structure, not your trend. It can be your trend. That's what you trade. But for me, I trade market structure. I buy low when I'm buying. I sell high. It makes sense. The big investors do that. They don't buy when prices are up. Everyone invests when things are low, right? Because that's how the market works. It's no magic secret. I'm not going to make this complicated like you guys do on YouTube and everywhere else, making this harder than it has to be. Um, so yeah, so I have these circles here, right? And these circles represent my trend. And like I said, so there's a short-term trend and a long-term trend. Short-term trend affects the long-term trend. The long-term trend affects the short. So right now, I'm not doing anything until I see price either break the range it's in, which is that white line and red. The white line up here is that represents the high of the current high of gold that I want to see broken. And when that current high is broken, that will basically let me know that there's demand active. So that means I can potentially find some demand levels of price that I can hopefully buy off of. So if I'm when you find your market structure on gold, is it all right if I show you guys this one? So you see how I'm zoomed all the way out and you can't really see the details? When you zoom all the way out when you're doing a trend, that's the secret to finding the actual relevant trend. When you're zoomed all the way in, you kind of don't see the full picture. So that's why on TradingView or whatever you do your trading, always zoom the screen actually out. I know it seems simple, but it can actually change your life, how you trade because it affects your ability to do technical analysis because you're now finding the trend analysis and you're doing it with more accuracy, right? So the first step is to go and um, yeah. So first step is identify your trend, right? Second step is um, identify your current high and low. So we identify our trend by zooming out from the price. Let's say nothing's on the screen, and we would circle these. We would circle this high, this low, this previous high, this previous low, this previous low, and we would say, okay, so here's how markets work. If a market is bullish, a market will look like this. It will go up, and if the market is bearish, it will go down, sorry, down, up, down. And your job as a trader, a supply and demand trader, is to get in with your retracement because when there's supply and demand in the market, that means that the market has expanded. So when I say expanded, I mean the market has increased in price or lowered in price. And because of that, you can get in the retracement because usually after that happens, there's always a correction. And that's how I trade. So in the bullish trend, right here, you're looking at the price action of this. Sorry, you're looking at the price action um, of this, and you're saying, okay, so if I'm in a bullish trend, which is where I'm looking at with the blue arrow right now, if the current high if price is currently right there, right, then why would I want to buy at the top? It's called FOMO. Um, FOMO is fear of missing out. That's what FOMO stands for. It's a market term and also business term. So people tend to have FOMO when prices of assets are high in any market, stocks, forex, crypto, forex, sorry, stocks, forex, futures, crypto. Whenever a price is high of something, the market will turn green, and people that don't know what they're doing and haven't traded or invested before tend to usually emotionally buy into that and will buy at the top when it's too late. And then they get mad when the price drops, they get mad when price drops when in reality, that's normal because price has to correct. The market doesn't ever go straight up or down, right, guys? It's obvious. So for buying, we need to first, we know our trend. Like, let's say the blue arrow is our current trend. Okay, well, now we know the trend is bullish. So where's our highs? Where's our current high? There. Let's mark it. Our current high is there. Our current low, where's our current low? Right there. Okay, well, now that I have my high and current low, now I need to identify my price range. And what's the obvious price range, guys? Your price range is within that current. Sorry, I drew something on the screen. Your price range is within that current high and low. So within this low and this high, you can buy or sell here, because when you're trading in a trend, and this is the whole trend, and you're identifying your current high and low, it makes sense that you would buy or sell within that, because if it reversed and it went beyond these highs and lows, then you wouldn't really be looking to do anything, because the whole point is finding the trend, being patient, and waiting for your sub to happen. So right now, price is up, and let's say I found, if you guys know me, I only trade two types of setups: order blocks and fair value gaps. And let's say there's a fair value gap at the bottom right here, which started this whole up move in the first place, right? Which was this expansion. Now, I just need price to come down and move and tap in to my one or two types of trade setups that I just explained to you guys, which is usually order blocks or imbalance gaps. So, um, what I'm going to be doing is um, I'm going to be using price action in a way. Sorry, guys, I'm just literally I just did some running, so my brain's a little bit. So yeah. So what I was saying was, one or two trades that you're always going to find trading my strategy is order blocks or fair value gaps. The reason that I trade these are because they're institutional. By institutional, I mean they're what creates movement in the market, because I buy off levels that institutions and banks are placing orders off of. So when a all movement in any market is created by the whales, the ones with the most money. Because when the ones with the most money come in the market and they buy or sell orders, what happens? When they're buying and selling orders, that adds volume, one. Number two, it mates the market. It makes price move in one or another direction. Because if I'm, let's say Amazon stock was down, right? And I'm a billionaire, so I buy like $2 billion, or no, I buy $4 million worth of Amazon stock. So that's gonna affect the chart, because since I have so much money and you're in the market, the ones with the most money dominate the market, right? So if I buy in a market that I have the most money in, the market will go up, because I basically now control the market. So that's why people say the market is manipulated, because it is, because the ones that control the market are simply the ones that have the most trading capital and place the most orders. And it isn't always a bad thing. Sometimes institutions and banks need to do these things because they need to balance out the economy. They have things they have to do. And yeah, so order blocks are my first type of trading setup. And if it's okay with you guys, I'm just going to go and open my Discord and show you. So let's just go. So the reason, guys, that I trade order blocks are because they are a great way to identify when those institutions, banks, and the whales are in the market. And they are actually also known as smart money. So if you heard the term smart money, um, this is why. Because the banks and institutions, it's a nickname for the ones that are the market makers, that make the market affect the market's direction. So yeah, let's go to the two trade tips that I trade. So you see those electric symbol, yeah, icons. This is my group, by the way. There's a lot of stuff in it, man. There's so much knowledge. I actually want to give you guys some free info if you guys don't mind. If you guys don't mind, just giving some noting, just screenshot this free info down, just because, just screenshot it. So let's go over it. Day trading the trend. Long term, this is basically all, I'm giving away literally all my time frames, all of them right here for you guys. All the traders can see my time frames for my strategy. Long term trend, mid term, short term. You can see the details. You can see the actual time frames. And I'm also going to show you, it doesn't matter what you trade. This affects everything. This works on everything. Um, the big financial, okay, so yeah, I want to go over this too. So traders, smart money, what is that? The big financial institutions, Goldman Sachs, ETC, right? Those are the big financial institutions. They make orders in the market. What is mitigation? Mitigation is when smart money, these whales, will break even on a losing position by, sometimes they'll, or losing or winning position by selling. So for example, let's say, I'll give you a perfect flawless example. Let's say right here in this diagram that I drew, um, right here at the top, the billionaires, let's say, invested at the bottom, right? And the bottom represents $100, right? And this billionaire waited until the stock went to $200, right? And now he's made millions, right? Because he put a lot of money in the market. And now that the stock is at $200, he now sells that because he has so much money. And what happens is that's literally going to affect. It's like him taking profit basically when he's day trading, and that's going to affect the market by pushing price back down to wherever. It's either going to come here a little bit, which is about, I would say, 30 to 40% of the range, which is the high and low, or price will come 50%, which is in the middle of our range, or even lower. And then they'll buy and accumulate as much of stock, forex, crypto, whatever they're trading, and buy as much as of that currency or whatever they're doing. Or if they're buying gold, they'll accumulate as much gold as possible, and then they'll buy it. And then what happens is while they're accumulating it, that's going to affect when they start to buy a lot. That's going to start to affect and make gold move, because while they're accumulating, it moves because they're buying like clusters and clusters of orders. And when it moves, it's going to keep moving and then go beyond 200. And now the stock's at 300, right? So the billionaire took profit at 200, and when he sold, and that's the reason why the market came back down to cheaper prices, right? And then he bought again. So let's say that area that came down to, right, that is going to represent $130. So let's say the second time he bought the stock, he bought it at $130, right? So he bought it at $130, and now he is making clusters of orders, and that affects the market, and that's doing the same thing it did in this example with 200. Now it's at 300, and so now the billionaire has millions more. And that's how literally trading works for anyone's strategy. If you don't agree with me, you're trading a strategy that's more of indicators, and it still works. I'm not saying you're wrong, but this is not made up. This is literally how all markets work. It's basic supply and demand. If you don't believe me, ask ChatGPT, ask anyone you know, ask YouTube, because I already know I'm right. You know I'm right deep down, but you're probably ignoring that because you know I'm right. But yeah, so if you guys are struggling with trading gold, let me know. Just ask me some tips, because I'd love to give you guys a bunch of like tips that I've tried to trade this guys for so many years, and it's just been so hard trading gold because every time I was try to do it, I would never understand like the trend. Like it would say on the 1 hour like it's going up, but then like where do you enter? So you enter on the 3 to 5 minute, sometimes 15 minute, and boom. If you guys need any more help, just be sure to reach out to me, and I will be there. So I'm gonna go ahead and end the video now. Again, if you guys need any help, join the Discord. If you guys can't afford the Discord, don't worry, guys. Nothing I have is expensive. It's not going to be like what you're used to: $500, $1,000, all this stuff. It's not going to be that. My Discord's literally $69 a month. It's meant for traders to network, learn, get more information to me, because I've been trading for about 6 years now, and yeah. So if you're interested in that, and you want to see my daily trade setups, you want to see what I do, you want access to me 24/7, then that's going to be for you. If you can't afford that, that's fine. It's not. There's nothing wrong with that. There's nothing wrong with that. I'm not holding a gun to your head to tell you buy my coin, buy my coin. What you need to do is buy my ebook, right? You don't have to, but you should. And the reason you should is because I have a lot of visual examples, because not everyone is a written they're more good with visual pictures and stuff. So I had a bunch of traders message me and say, hey, can you put more pictures in the book? So I added a bunch of like pictures, and it's not expensive, by the way. I added a bunch of pictures and visual representations of everything I talked about in this video and what I do, so you can understand it, and like even a fifth grader can read it. And if you're not interested in that still, don't buy anything. Okay, no one's forcing you to buy anything. Watch my YouTube videos; they're all free. I have like 100, I have like 400 plus thousand videos you can watch for free. And yeah, so um, I'm gonna go ahead and end the video now. I hope this video was helpful for you all. If you have any questions, you can always message me. And yeah, peace.